In today's video, it's all about Australia. I'm having a look at some of the GDP estimates that are coming through right now. I'm also going to be looking at what some of the COVID-19 recovery options might be and outlining 3 different scenarios that I see as possibilities. Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'll be your host through today's trading journey. Now, the first thing I said before was that we are talking about Australia. Now, Australia's GDP, as most of us might know, has got a large interest in exports, particularly to China, with a big interest in mining. So some of those things are starting to get affected, and due to all the lockdowns that we're seeing and obviously the international borders that have been shut. This may continue, but in the meantime, let's have a look at the GDP results and see what might come out from it. Now, these estimates here that I'm showing you are from Bloomberg Economics, and they have basically made estimates on what they are expecting to sort of happen in the next couple of quarters. It does look like it's going to be negative for this quarter, but we've all kind of priced that in already and are estimating that it's likely to occur. The question is it going to happen a second time and go into the second quarter? The other further questions to add to it is there a potential for there to be a second wave of COVID-19 infections going around and therefore a second run of lockdowns? Now, naturally, this is something that could potentially happen. We've heard news throughout the day that we might end up seeing COVID-19 or at least coronaviruses starting to operate in a seasonal capacity, much like influenza, where it comes around every single year. But until we see that sort of data, we're not really sure. So right now, the estimates are very short term, looking at towards the end of this year, beginning of next year. So in this instance here, it's indicating on the chart that you can see, it's showing that we might start to see a recovery sometime in the 3rd or 4th quarter. Though that is pending, it's obviously not actual data coming from the RBA or the Bureau of Australian Labour Statistics, but it could certainly be a part of the spectrum. And usually when you see stuff from Bloomberg Economics, it's not too far off the mark. So looking at the idea of what they see as recovery potential, here in this chart it shows the absolute best case scenario being the optimistic side and the pessimistic side being the worst case scenario. So in both of these instances, we do see a level of recovery, but how long it goes for, how quickly it is to take off, and the sustained growth, or at least the vector that it travels on, is very different. So pause the screen if you'd like to get a little bit of a closer look. But really, all I'm trying to iterate on this is that recovery is certain, but just when it's to occur is the problem. Now, at this stage, it looks like on the chart, they're sort of indicating that we might start seeing it and it will take a significant amount of time to get there. I'm not falling for the trap of being on the optimistic side of things here because of how the scale of COVID-19 has been quite dark. So I am a little bit pessimistic. I do think that even some of these options here in terms of what we see as recovery going forward might be still optimistic on the pessimistic scale, but who knows? We'll have to see as we travel it out and mitigate the risk as we go along with our trades. Now, thinking about some of the scenarios that might happen. The first scenario that I can sort of see happening is that we have COVID-19 as a second wave. So think of this as the worst case scenario. We then have new lockdowns measured up and we get GDP growth doubling down, and instead of actually growing, we see it push further down into the Southern Territories, which wouldn't be unexpected. And if it did actually happen in this way, then the likelihood is that we would literally see our GDP fall twice as much as it did this time round. But who knows? We'll still have to have a look at it. But at least if you have an understanding or thinking about these sort of scenarios, you might be able to prevent or at least have a worst case scenario and hoping for the best sort of situation going on. The next scenario that we look at here is scenario B. And in scenario B, I think of it as economic scarring. So the idea is being that because of all the lockdowns, we see a lot of businesses that have problems and are still transferring or traveling some of the debt that they may have got on their balance books during the lockdown phase, and they're trying to battle their way out of it. Now, naturally, that's something that's like a real concern, and this is probably a likely scenario that even if we don't get a second wave of infections, the chances of a lot of companies that have already gone under or will be going under in the next few months will be quite high. Them trying to get back into the black is going to be a long, slow, struggling process, and therefore it's going to cause problems for the economy front as well, including household spending. So from that, it means that we end up having our businesses run in basically limp mode, which, naturally doesn't sound good and certainly isn't going to be good for making growth on that GDP number. Of course, this means that we will likely have a much longer expected recovery than what we were forecasting in an optimistic right. Now, the next one to sort of consider is scenario 3, or C, if I like to call it. And it's really about the idea that we get knuckled down and we have a really optimistic outlook. COVID-19 gets contained. We have New Zealand trade starting to boost up because now that we're so close together, we end up within our own trading bubble between New Zealand and Australia, with most of our travel going back and forth between there, and that might raise some new business opportunities for many of those sort of ANZAC sort of companies. Now, the other issue that we might see from here is that there might be a possibility is that China does recover quicker. And if that's the case, then it means that our spending starts to increase here. It also means that exports increase, we get more profit coming in because we've got our minerals and offshore sort of stuff going out. And that also means good business for New Zealand as well. So it ends up being a three-way sort of a bubble where we see prosperous sort of relationships starting to build. However, that's all dependent on the fact of asymptomatic travel or carriers of COVID-19 in China not being able to spread it across back to Australia and back into New Zealand. So the absolute optimistic side is that everything goes perfectly. Now, those three sort of scenarios are definitely something to think. There are probably some that are going to sit on the outliers either end of that, and there are also probably going to be some on the inside closer to the mean. So my personal preference is likely going to be scenario B is what we're going to see happen in the near term, but it will probably move into one of the other scenarios further down the track, depending on what we see with COVID-19 in the future. Now for tonight, I did say this a bit earlier this morning, we do have a couple of things coming out in terms of news that you might be able to take a trade on with actionable knowledge. We have here Spanish unemployment. Now the Spanish unemployment rate has traditionally been in that 12 to 15% mark. We have seen it rise a little bit with COVID-19, but hopefully we don't see it rise too much further. We've also have US consumer confidence. Now that's coming out at about 1 a.m. Australian Eastern Standard Time, and that might be a good one to watch because it'll gauge and give an idea of how the US economy is thinking about their money and how they're thinking about the economic situation over the next 6 months. Of course, tomorrow is also a public holiday in Japan, so be wary if you're trading any of those yen pairs. Now, if you want to get in contact with me with any of the stuff I've covered today, feel free to send me an email at talktoal@acy.com. And of course, don't forget to like and subscribe the video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.